So, thanks. So thank you very much. Happy to be here, and also nice to see that with basically the morning getting later, more people are waking up and coming here, right? We have been very few people at 9 o'clock, but we should not forget that right now there are also 500 people watching online. 800 people watching online, so always keep people in mind not being here. You know, it's really working well so far, and it's also nice for me personally to be here again and do such conferences with people in real life, not just on Zoom and so on. And therefore, I'm also very grateful to the team, Marcel, and all the others for setting this up and organizing it. Perfect, let's get started. We have really some amazing companies here who are some already old companies from the crypto ecosystem, so to say, not just startups anymore. And with this panel discussion, we would like to give you the following topics very briefly. First of all, we would like to talk about the regulation. Generally, we talk about the unhosted wallet topic we are having in Europe these days. Then we talk about a little bit about the impact of the sanctions with regard to crypto assets and so on. Then we are moving on how asset classes have been developing in the last year, but how they potentially will develop this year. So the primary goal of this discussion should be, where are we right now in terms of legal certainty, asset classes and so on, and where will we go until Christmas this year? Will Bitcoin finally go to zero, as so many people out there expect, or will it be even more assets coming to us day by day? With this, I would like to ask everybody here on the panel to very briefly present himself, herself, to provide some context on the company. And maybe, Christoph, you're starting.
Sure. Philip, thank you so much for the invitation. I really appreciate being here. It's a great audience. It's great that we have people virtually joining us, and I'm really grateful to join such a high-ranking panel. My name is Christoph Kreiterling. I'm working for the German financial regulator. I'm working in the section for innovations in financial technology. And, you know, I'm kind of like trying to follow what's going on in the market and trying to make sure that we at BaFin, you know, we're not completely losing track of what's going on, and I'm trying to like challenge my colleagues and also trying to challenge the market. So that's kind of like what I'm doing.
Perfect. Also my personal opinion is here, you know, in Germany we have quite good laws happening over the course of time, roughly, but the problem is the European level, because we have so many people who are not understanding what they are voting about. That's the issue. We saw this last week again, and that's what we also will discuss here. But I personally think that in Germany, BaFin and the others have done a quite good job. Maybe Coinbase is confirming this.
I agree. No, thanks for having me. Happy to be here. I'm Andrew Robinson. I represent the institutional sales, trading, and prime business for Europe, the Middle East, and Africa at Coinbase. Coinbase is one of the oldest and longest-running crypto exchanges that now has kind of morphed into a collection of crypto businesses across retail, consumer, commerce, Web3, et cetera. So looking forward to the discussion today and meeting with you all over the next couple of days.
Sorry, Tim Bunjes. I do work for Fireblocks here based in Germany. We build and provide technology to 1,000 customers that want to run and build their own digital assets business. So kind of the machine room, never disintermediate. So we happily take that technology basis and allow our customers to grow their digital assets business. Great to be here.
Well, thanks also for inviting me. Always a pleasure to be with a live audience again, and not just a virtual audience, although a shout out to everybody who's joined virtually. My name is Katharina Gera. I'm with Immutable Insight. We do 3 types of blockchain businesses. We do asset management, we do AML compliance and sanction tests, and we also do industrial analytics. And I'm very much looking forward to discussing with you.
Good morning, everyone. Last but not least, great to be here. My name is Andrej Vojnia. I represent 2 companies, actually. The main one, which I'm here for today, is called ETC Group. They are an issuer of crypto products, so Bitcoin trackers, Ethereum trackers, and similar. And the other company is called Han ETF. We are the distribution partners. We focus on ETFs, things like Metaverse, which also play into the crypto discussion. So Hopefully I can give you some insights into what's happening in the product landscape. We work with BaFin very closely as the first crypto ETP that got launched under German law 2 years ago. So quite an exciting journey, the last 2 years, and yeah, looking forward to the discussion.
Yeah, perfect. So we now know everybody and his or her position. I think that's quite helpful. And let's start directly with the topic around the unhosted wallet. So what happened last week? European politics decided to have some kind of, let's call it, crackdown on unhosted wallets. And now what's your opinion? Is this basically weakening the space? Does it really matter? Because when you look at the prices of crypto assets, you know, the markets don't really care about European politics. Otherwise, we would have seen minus 10%, as we have seen it in other cases in the last years, right? So the markets did not care at all. But maybe we are caring here, especially people sitting in Europe who might see their ecosystem a little bit weakened, especially with those businesses in those areas where many transactions are being done, NFT, DeFi, and so on, as opposed to Bitcoin hodling. You know, with Bitcoin hodling, no transactions are occurring, so the issue might be a little bit weaker there. Who wants to give it a trial on an assessment about what happened last week? Is it bad? How bad is it? Or is it not so relevant?
Okay. Well, I'm not so sure if the unhosted wallet issue is our biggest issue. I think it's just a symptom. It's a symptom of the lack of a broader competence in this space. And it's the basic conflict between nationalist or territorial legislation and a decentral global industry. And I think this is the fundamental trigger that we need to address. And we try to promote blockchain competence in Germany, but also in Europe. And I think we've also seen with the proof of work ban on Bitcoin that was at least put to vote, which I think is already pretty scary. So I think overall, Europe is on the march to trying to forbid things that are not forbiddable. So we need to have a broad education around the politicians.
Yeah, good point. So it's also about educating politicians such that they know what they are voting about, including the consequences. Anybody wants to add something, or?
I guess just to add it from a business perspective is that it doesn't necessarily, at least like from a crypto exchange, it doesn't change that much, right? If you're already operating in a regulated kind of compliant KYC, AML perspective. So yeah, it's maybe another layer or two of things that you have to put in place from a tracking perspective when it comes to unhosted wallets, but it's not super dissimilar from some of the other regulations that we've seen other European countries put in place, be it like the Netherlands or now Spain and France with some of the different crypto registrations. So I think that from a business day-to-day perspective, again, something that's easy to comply with, but more so points to the lack of understanding of how digital assets and the crypto economy really works. And it's more copy and pasting existing, fiat regulation into the crypto world, which isn't a one-for-one match. And so I think that it's one of these things that the headline is always worse than reality. And then when you kind of dig into it and everyone takes a pause and they realize that there's going to be tweaks along the way. And I think that that's the reason why we didn't see the market overreact as much as we could have when the headline hit the news.
I think that was a very helpful comment because actually the word crackdown might be a little bit over-exaggerated, right? So there are solutions out there how to deal with it, even if some people would like to see it with more freedom solutions. What about sanctions and all this regulation going on? Because very often, or at least in the past, the government made regulation from the outside and then the capital market did their businesses within these regulations. And so many people in the blockchain space always wanted to have regulation and blockchain to somehow merge, such that a term like embedded regulation comes up, such that, for example, the regulator for the regulator, it's possible to monitor what's happening in the market in real time, instead of asking banks to report on the situation once a month, right? Do we see this now happening, for example, with regard to sanction oracles popping up, maybe, Katharina?
Yeah, I think real-time analytics can be a huge driver for efficiency for regulators, but also the national banks. And I think this is a way we need to go. We've just launched something called Sanction Test, where you could do that on a transaction basis, so you don't need to have a whole software package or anything. You can do that very easily, and I think this is the way to go. Once they can have the facts and once they can have them in real time, then we will also see an uptick in quality.
Yeah, excellent. So what about you, Christoph? Do you also see regulation using more regulation getting more tech intense?
Well, definitely we see a much more opening mindset, if you will, towards what's going on in technology and like, you know, peeking behind the curtain, what's really going on. And I'm not like disclosing any secrets here if I'm telling the audience yet that you and I are teaching here in Frankfurt School together. And just 2 weeks ago, one of my students then said, when we really looked at the behind the curtain and looked at the technical details and everything, and one of my students then said, well, the idea of Bitcoin was to get rid of all the intermediaries, and now there's so many more new intermediaries. What's going on? And like, I think the original idea is still very prominent, still very much in place. But as of now, as we can see with regulation, and the term embedded regulation is in existence since the rise of smart contracts, to my understanding, right? This is at least when I came across the term the first time. And as of now, we must say, even though the technology could potentially address this, we still need the regulation as it is right now for the vast majority of the market to move into a certain area. This is what we at least see how the market reacts.
And concerning the development of this year, do you see any more laws coming to us with regards to customer protection? You know, we see these NFT sales happening, we see influencers advertising NFTs. Do you see like a situation where the regulation around such token sales is tightening?
Well, the market development is very quick. Like, you know, everybody says like, you know, 1 year in crypto, no, sorry, 1 year in internet is, no, like, okay, forget it. Crypto is moving much faster, okay? That's what I wanted to say, okay? Yeah, and yes, I know math, okay? So don't scold me for that. No, but the idea is the market is moving fast, and as a regulator, it's completely normal to be behind the market developments. It's completely normal. This is like systematically. But of course, we see developments that are enabled by regulation, and we see other developments that are cracking down because of regulation. But other than that, I think the market that we see this year, as you named a few things, NFTs, for example, and there are some developments you can't just put in a simple bucket, right? There's like, I don't know how many different ways to categorize tokens. Like everybody comes up, here, I have a new idea how to categorize tokens. I have like, you know, here I have 3 buckets, and somebody else comes up, I have 10 buckets, right? However you approach it, there's a few things that you can put together, right? There's like, okay, here, for example, we regulate security tokens as under the MiFID II, for example. Okay, that's easy. But if you look at the market, for example, of NFTs, it's so broad, it's really hard to say there's a one-size-fits-all as of now, right? So I think it's very interesting to see for us how this develops. And, you know, our mindset will be as a regulator, we are there with open eyes. We are there for an exchange. We are there to listen. But when the time is you know, when we have crossed a certain time, we have also to act. We will then act, and if necessary, act not in favor of everyone. And of course, also, you know, I was listening to, there was a presentation, someone from Coinbase, your colleague probably, saying, oh yeah, the German regulator is doing good. Everybody here is like, you know, I'm asking myself, is that the job for a regulator to get only praise? Like, where's the criticism, okay? I think not everybody should be happy what the regulator is doing. I think if it's balanced, then it should be better. But we'll see. Maybe you come up with some criticism that you want to tell me about. Thank you.
Maybe I can give you a little criticism right there. Because on the topic of regulation, so we dealt with BaFin when we, and when I say we, it's the company, ETC Group that I represent. It took us, I think, 13 or 14 iterations of going back and forth on the prospectus, which is a necessary legal document which you need to get approved before you can launch a regulated product on a certain underlying asset class. And because it was new, 13 iterations is long. It's a lot. It took, I think, a good year until you gave us the okay. So you could on the one hand, from the consumer perspective, you could say that's great, and that's why we did it. That's why we wanted to do it in Germany, the first product, because we knew it's the stamp of approval of a regulator who's strict, who has high standards of consumer protection. And that was back in 2020, in June, when we launched that very first Bitcoin ETP on Deutsche Börse. As I said, it took a lot of time, a lot of money, but then the recognition was there. And I think the way the whole space developed, not just us, but there's other people in the room and companies here today that have products. The regulated crypto space has proliferated greatly last year. I think we have more than 70 products listed already on exchanges across Europe, tracking Bitcoin, Ether, and more esoteric, if you so want, coins, which for some of you might be plain vanilla. If I say, Solana, Cosmos, Avalanche, people are like, whatever, I can do much more fancy stuff if I go into the market directly. Yes, but the regulated side is catching up slower, but it gives people that certainty. When you ask, regulation is important because you never know. The crypto space is unregulated and it's developing fast and it's messy and there's lots of things happening. If you know your way around there, great, fantastic. Go in directly, come up with ideas, companies, whatever. But there's people like my dad or other people who just want an exposure and be part of that industry somehow, to participate by investing in it. And they can only do so in a regulated way. You want at Comdirect or at OnVista to have your account where you can trade like a stock or an ETF, something that is related to the crypto universe, right? And that's what people like us and others did. And I think the industry ballooned to something like, I don't know, close to 10 billion or something in assets in these products, which just shows the interest from consumers and investors to have these type of tools at their disposal in a regulated way.
I think that's a very interesting comment, and let's add one more point here, because in the US, this market has not matured so fast. So here it's interesting to see, especially Switzerland, right, but also Europe moving quite okay. But still, Christoph, you don't need to respond here necessarily, but my feeling is that the regulator is getting a little bit tired of this huge speed. We had the ICO craze a couple of years ago, and at that point of time, the European Commission and the ESMA and all these guys, they immediately try to investigate it, they put out reports and so on. Now you have DeFi and NFT and the metaverse and this and that, and you somehow feel that the regulator is getting a little bit tired from this incredible speed. That's my feeling, right? Maybe I'm wrong.
Yeah, Philip, I think that's maybe some sort of a correct characterization, right? I mean, crackdown seems to be harsh. I think it's an iterative process of regulating what's regulatory worthy. That's number one, and also what we definitely see from Fireblock's perspective, because we do sell more and more our technology to heavily regulated institutions out there, and clearly they are absolutely in the need of operating under regulatory clarity, right? 100% clarity around what they can do and can't do, right? So it is a huge competitive advantage. I can also say that here, that from a global basis, you look at companies outside the European Union, outside of Germany, looking at Germany today and saying, well, this is fantastic, crypto custody licensing, that's amazing. We don't have that. We're not even there yet, even thinking about regulation. But again, that speed of adoption will only increase, and yes, product services will be vastly different in 12, 24 months. May that be DeFi, NFTs, we talked about that. But keeping up the pace, I think, is something, yeah, you absolutely also got to deliver on the regulatory front. So I understand it's not sometimes too easy, because you also have the people who can deal with that.
And one remark here, the MiCA is basically underway, right? So you also have worked strongly on this topic, and I think it's interesting to note here that many people are also awaiting MiCA finally to come into force, such that basically lots of topics will then be thought of automatically, and we don't have to open the regulation box 2 times a year again with all kinds of crazy tokens. Let's move on to the next topics. And one is about the various asset classes which are emerging. We had Bitcoin in the past, and we had Ethereum, we have layer 1s, we have DeFi, NFT, metaverse tokens coming to us. We don't talk so much about security tokens today, because this will be the topic for tomorrow. But everybody here now on the panel, what's your assessment on various asset classes? Which asset classes are developing nicely? For example, concerning the NFT domain, did we see the peak already, or is it a topic which will increase? What's your assessment on the various asset classes? who wants to get started? Yes, please,
So
Tim.
I say, again, from a global perspective, US crypto, 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 kind of like the casino, like making money and investing and like yield generation and alpha. Asia, much more balanced, crypto and tokenization. And obviously Mika and all the elements of around regulatory clarity, a much more balanced view around, of course, crypto, but again, usually very cautiously. And then definitely from our perspective, we do see a lot of tokenization projects.
What tokenization projects, like the traditional discussion around tokenization of off-chain assets, like debt instruments?
Correct.
Okay.
Correct, yeah.
Okay, just adding some clarity here.
Yeah, I would say largely it's still mostly crypto-driven. Obviously, NFTs has been an exciting topic, but a bit of a distraction, right? And I think that obviously there's a long-term path forward for them, but we need to understand what that means. I think that from a corporate perspective, a lot of corporates are excited in terms of how to engage with their end clients in a new medium. However, they're just now starting to really assess what those strategies are going to be and how to have value besides kind of a headline or marketing buzz. I think that what's more exciting is just the growth in the traditional crypto assets, which is weird to use the word traditional in sense of new assets class, because even with security tokens and tokenized securities, there's been a lot of buzz around real estate, and a lot of the innovation is interesting, but there's not really marketplaces where these securities actively trade with any real liquidity just yet. So I think that that's something that we'll build to. But even if we just think about the numbers in terms of what institutions have traded in crypto assets, on Coinbase alone last year in 2021, there was $1.1 trillion traded by institutions versus 120 billion just a year earlier. So I think that that kind of growth is super exciting. Or if we think about, I've been in this space now for 4 years, and last year, 24% and 21% of the volume on our exchange was Bitcoin and Ethereum, respectively, right? Where, again, a year ago, those numbers would have been north of 50%. So it's really interesting in terms of how institutions have said, we're comfortable with this asset class. Owning Bitcoin or putting a basis trade on for Bitcoin or being directionally long or short Bitcoin is now a given. We actually want to go deeper, and we want to start to engage with various DeFi protocols, or we want to go down the market cap. So I think just the overall growth and appetite, and also understanding and education to the point around regulation. Now we're seeing a lot of funds say, hey, if we're trading DeFi strategies, are we kind of potentially in breach of any regulatory standards, right? And so how do we actually do KYC AML if we're trading on a DEX? So institutions, again, are just kind of eclipsing the speed at which they ingest this information and get deeper and deeper into this sector.
Yeah, I think I can fully concur with that. I think that we still see with staking and the whole question, how can you do sustainable crypto investments, and the whole DeFi question in terms of once you have the Bitcoin tracker at first, and then you maybe have an Ether tracker, but how do you go down now a more sophisticated route? So I think the overall understanding that this is a whole actual asset class where you can have all kinds of risk return profiles and you can do sustainable investing, the level of sophistication increases, and also the level of understanding. It isn't just one thing you can put into your portfolio, but across your portfolio allocations, there is an alternative in crypto. If you have an equity type risk return profile you want, there is something in crypto. If you want to have a bond type risk return profile, there is something in crypto. And I think there's one fundamental change, and I think this will be the dominant theme of 2022. And this is the whole value of decentralization once you see what's happening in the Ukraine and once you see what's happening with SWIFT and sanctions. So I think the whole idea that you're dependent on a system or you are to an extent independent of a system, and who can take that away from you at what point in time under which kind of global theme. I think this will be the paramount shift because people now understand why this isn't just another allocation, this is a systemic hedge. And that's something, particularly also when you see inflation, nobody else has. So I think this will be the dominant theme.
Very interesting points. We should have an entire speaking presentation on these topics because that's basically geopolitics which are going on, and I hope we touch on these issues the entire day. Actually, that's very interesting. Inflation, systemic risks, and so on.
Yes, just a quick point, if I may. Sorry, I know it's probably time is running short. Just a quick viewpoint from the regulated side. It's interesting because Coinbase said they had Ethereum and Bitcoin being below 50% already in trading volumes. In the regulated world, we still see 90% of assets actually being in Bitcoin and Ethereum, and Bitcoin still leading the way, Ethereum catching up, and we see some of the other newer coins, like Solana, for example, or basket coins, where people take diversified exposure instead of a single coin exposure. That's growing, but it seems like the professional investors, if you want to call them that, they initially wanted just to dip a toe in the water and say, let's take Bitcoin as a portfolio diversifier or something like that. You know, it's uncorrelated. Let's just mix it in, high return potential. And step by step, they're becoming more sophisticated. You've had already the hedge fund space, the alternative investment fund space, already there for a long time. So the hedge fund strategies of this world exist. I think there's more and more of them coming in a quantitative way or more sophisticated way to the more, let's say, transparent, regulated market, be it in standard UCITS fund format or in ETP. I think that will be one evolution in the future. The other one is products with staking, for example. Staking is something that, if you're a crypto native, you know it, and you've probably done it for a long time. But it's coming to the ETP world. We see people wanting to have yield, 4 or 5% you can get on things like Polkadot or others. So that's something that's really evolving. And the last thing, just to note, what we did a little kind of roadshow recently to find out who's actually investing in these crypto ETPs. Where's this 10 billion figure coming from? And at least speaking for Germany and for our ETPs, we found out that 30 to 40% is from private investors, which you might say is not surprising. But if you look at the ETF space, the standard investment fund space, Europe is very much a professional investment landscape, where you have a much lower, in Germany specifically, you have maybe 10, 15%, 20% max from retail going into these funds. So it was a very interesting fact to see that here retail and private investors are driving the adoption and the investment, and it's the big guys like a Deutsche Bank, a Allianz, a Odo, you name it, whoever you want to name, they're still slow in the sense that they're driven by the end clients saying, I want exposure, I read about this, I'm interested, can you give me something? But of course, they are slower to move because they need regulation. They need to be sure that nothing goes wrong. They can't put their head on the line and, they're 200-year-old institutions. So that's still to come. So that's why we are actually very positive that the industry is still in its infancy, at least in the regulated space.
I would actually just like to share one market research that we've just done 2 weeks ago. And the question was, from anybody who has done self-directed investments, so not bank-led, but has made an investment decision on their own, whether it be equities, ETFs, or you have not. How many of those have done cryptocurrencies, retail? And the answer completely blew my mind, because it was 40% in Germany of self-directed investments have a crypto exposure. And most of those, that's their single only self-directed exposure. So I think this tells a story about how far banks are in terms of actually denying a client a service that they want, and they actually go the extra mile, and then they get that exposure outside of all the convenience that we otherwise claim, and get that exposure themselves. So I think this is where we are in terms of how much of the opportunity banks are missing.
Just let me add one thing, because all this great news about crypto growing, and yes, we see that too, of course, institutional and consumer, it's growing. But of course, let's also look at the risks. Also the risks are rising in the same context. And particularly if you, like, it's not just, crypto is not just like, a market that is just a one market that develops in one direction. Specifically, if we look towards DeFi, right? If you look at DeFi Pulse, total value lock, at the beginning of the year, it has been going down quite significantly. And let's not also forget the decentralized in name only, the DNOs, right? They are also important to know, because they make sure they make use of a nice word, decentralized now, and they collect a lot of money. And then you see things like Wonderland, right? That can make almost magic internet money, not saying it crashed, but it was moving quite significantly, much more than many people were hoping from such a small DeFi protocol as Wonderland. So the risks are there, and I know, the market is growing, everybody's like, yay, cool, okay, but it comes at a cost, and the cost is the risk you're willing to take.
Yeah,
I just want to add that.
No, absolutely right. Think of Olympus. 1 year ago, everybody talked about Olympus, and now it's gone, right? It's a token which is simply disappeared, like Wirecard. 3 more points, and then we have to close the panel. We didn't talk about 2 aspects in terms of tokenization, which we missed out. Stablecoins are on the rise, right? And tokenization of CO2 is basically, at this point of time, a little bit under the hood, but seems to also grow significantly. And I think we should see also some major developments this year in the tokenization space of CO2. Anybody wants to comment on this? You know, stablecoin, CO2, and asset classes which we might have missed?
I can quickly say, many of you know, I'm really critical about Tether, so I'm not really willing to comment on stablecoins. But I would like to pick up on the CO2 certificates being tokenized, because I think this is a great example where the new technology for an emerging field of investment is actually the better choice in terms of how to do that. And I think this will be really interesting, because if you have a traditional CO2 certificate, measuring what actually happens is impossible. But if you have a tokenized world and you look towards the token economy, you have a CO2 certificate that's being tokenized, and you can measure what's going on in the actual physical offline world. So you can actually get an additional benefit out of that. And the whole scheme around having so many different certificates, nobody understands. The standardization and the scale of then having one trading token will also help to create a better and efficient market. So I think it's almost like the Google search wasn't a business model before there were a lot of web pages. And I think the CO2 regime could be one of those markets where we see that the competing tokens eventually create a better investment opportunity than the traditional world.
I'll take a stab at the stablecoins, I guess. As an alternative to Tether, obviously Coinbase and Circle, with the consortium, we have USDC that has seen a lot of growth to be a relatively newly launched stablecoin. And also you have programmatic coins as well. And hopefully one day, you know, kind of the Euro version of USDC and Sterling, et cetera, will follow. But I think that one of the interesting use cases, or several of the interesting use cases that we've seen for stablecoins have really been, one, from institutional perspective, with VCs funding a lot of their new investments directly in portfolio companies in USDC. Given a lot of these companies are operating within the Web3 space, it just makes it easier versus going into and out of fiat. The second has been from like a commerce perspective. So a lot of the corporates that have started minting NFTs or purchasing land and everything in the metaverse, they'll kind of come in via stablecoin, or if they buy ETH, if they're receiving ETH rather for the NFTs, they'll automatically convert that into USDC, and they'll look to potentially lend that out. And then the third is from, I guess, the general institutional perspective, where the crypto ecosystem is pretty starved for fiat. And so, you know, one of the things that we do from a lending perspective is that we'll borrow USDC from a lot of our partners, and we'll over-collateralize that with Bitcoin. So there's been a tremendous growth in stablecoins just outside of people kind of looking for yield, I would say, within the last 12 months. I think that when you consider stablecoins, the one thing that we're still probably TBD in terms of the market is kind of the value of central bank digital currencies, which also act as stablecoins, but go against the very kind of philosophy of decentralization versus kind of stablecoins that have been created by various partners or projects within the ecosystem.
Yeah, interesting point, definitely. And we unfortunately have to close the panel at this point of time. Let me quickly summarize. I think all points which we discussed come to one of the following conclusions, which is basically it's all growing to some degree: DeFi, NFT, crypto, custodians, tech, ETFs, and so on. It's all growing. But also don't forget what we have not talked about. And I think that's interesting when you reflect on the last 5 years. We did not talk about what is Siemens doing, Daimler, ThyssenKrupp, you know, all the industrial companies are somehow gone from the blockchain space at this point of time, right? That's just an observation, you know. Think about what we are talking here, that's very positive, but also you know, it was also difficult for us compiling the agenda, you know, what should we talk about with ThyssenKrupp and Daimler and so on, because they have shut down their blockchain units. And on the other hand side, you have like tremendous growth in these domains. I'm not saying that this is good or bad, it's just a very interesting observation when we now analyze where is the dynamic happening. That's basically all the topics I think we discussed this year, and it will proceed the entire year. Let's move on with the agenda. Marcel, you have the word.